Hello, I'm Connor O'Gorman and this is our exchange rate group assignment. Our first currency analysis will be that of the Australian dollar in comparison to the euro. As of the 17th of September 2016, one Australian dollar currently buys you 0.67 euro. Graph courtesy of fxexchange.com. Most notably, the ECB has cut the interest rate to 0%. A 0% interest rate may seem attractive as a way to ignite a stagnating economy plagued with excessively high debt, coming from unstable countries such as Greece and Ukraine. However, it comes with its cons. Although economic growth in the Eurozone has increased minorly since the ECB cut the interest rate to 0% in March, manipulating the interest rate policy certainly has its risks. Graph data courtesy of the ECB. More consumers are attracted to the low interest rates on loans that are offered by commercial banks, resulting in debt and unsecured investments, possibly turning a fragile economy into a broken one. However, so far, so good in terms of the ECB's policy, therefore suggesting that a well-handled recovery of the euro will result in appreciation of the euro against the Australian dollar. Brexit provides some uncertainty in the long term. Surrounding effects of the currency strength once 12% of its previously free exports now face possible impending tariffs. In anticipation of these effects, it is overall unlikely that the euro will appreciate too much over the next 3 to 6 months against the Australian dollar. In recent times, the Reserve Bank of Australia has been cutting the interest rate consistently, as means to promote economic activity and stabilise the plunging economy resulting from the gradual decline of interest in Australian natural resources. The appreciation surrounding the mining boom can be explained simply. As our resources became more valuable and commodity prices rise, our dollar became more desirable as return to capital in Australian companies rose significantly. But with falling amount of resources mined, how can Australia maintain such a strong dollar? 10 years ago, investing in the Aussie dollar would have been a wise move. However, now the AUD is faced with some uncertainty. Cutting interest rates to 1.5% provides an ideal environment for banks to lend to consumers. However, low interest rates tend not to attract foreign investment, especially if investors' local markets' interest rates are higher than Australia's, possibly decreasing the demand for the AUD and thus a depreciation against other currencies, including the euro. Now to hand over to our inflation CEO, Finn McLaughlin.
Hello, I am the CEO. Coinciding with the 0% interest rate policy introduced into the European Union in April 2016, the inflation rate was at its poorest at negative 0.24%. This means the EU was actually going through deflation. Once the policy was in motion, however, they started an immediate turnaround, increasing its inflation rate ever since to a now 0.16%. According to rateinflation.com. They introduced the 0% policy to stimulate the economy and reverse the ever-increasing deflation rate that loomed over the European Union. Inevitably, this seems to have started to make an impact, as it has since turned this around. The Australian inflation rate has recently been dropping. Since last December, it has dropped from 1.7% to 1%. The RBA has tried to decrease interest rates in an attempt to promote spending and increase the inflation rate, but hasn't seemed to affect it. A decreasing inflation has a negative impact on the economy as it coincides with the growth rate. In relation to the EU, Australia has had a negative downward trending inflation rate, with the EU only growing stronger. The growth rate of Australia is currently at 2.26% annually, but has been falling since 2012, whereas at 3.63% according to the worldbank.org. This is a sign of an unhealthy economy and can cause a depreciation in the currency, making it weaker. The EU is currently at 1.95%, has been rising since 2012, whereas at negative 0.477%. This change of growth and inflation enables the euro to maintain and even gain value against some other currencies. In relation to the Australian dollar, the euro has been improving in its growth rate and inflation, making it a healthier economy. Neither currencies are expected to undergo dramatic changes over the next 6 months. A range of factors, including the anticipation of the effects of Brexit, government policies, foreign investment in Australia, as well as the management of the Eurozone's debt limits either currency from excelling against the other. In a 6-month period, the EU is expected to appreciate against the AUD gradually and without significant effect. And now over to Naomi with our next currency pair.
So as you can see on the slide, US dollars is currently stronger than the euro. So $1 is equals to 90 cents euro. Inflation rate, interest rate, and exchange rate are all somewhat connected. All central banks work around the interest rate and inflation rate in order to keep the economy flowing and growing. Currently, the United States has an interest rate of 0.5%, and due to the recent increase of the inflation rate, there is a big possibility that in a couple of months the US Federal Reserve is going to increase the interest rate. Meanwhile, the Eurozone has an interest rate of 0%. The low interest rate is due to the slowing down of the global economy. The euro areas has been through a lot with the terrorist attacks not long ago, debt crisis, and also Brexit, which would make the Eurozone less attractive for foreign investments. The next diagram shows the supply and demand curve if the US Federal Reserve decides to increase the interest rate. So if they decide to increase the interest rate, it will encourage and boost the confidence of the investors or lenders to invest their capital in the United States, as they have a higher interest rates, which means that the rate of return will also be higher. The shift from D1 to D2 shows that due to the attractiveness, the demand for the US dollars will increase. And the shift from S1 to S2 shows that people who already invested their capital in the States will be leaving their investments in the country, which reduces the supply of the US dollars. So a country with higher inflation rate can expect its currency to depreciate. The inflation rate of the US and Euro are relatively low, and even though the US has a higher inflation rate, there are other factors that will determine whether the currency would appreciate or depreciate. On the next slide, you can see the history of the inflation rate in the States from 96 to 2006. Both the US and Eurozone are expecting their inflation rate to slightly increase. If it happens, the strength of both currencies would decrease. Hence, if it, I mentioned before, there are other factors that that determines whether the currency would appreciate or depreciate. Higher inflation rate usually means that there will be less demand for exports, which means that the demand for US dollars will decrease and supply will increase. As the UK intends to leave the European Union, this would affect the euro more than it affects the US dollars. Firstly, the Brexit would encourage other countries in the European Union to follow the footsteps of the UK and leave the EU, which would lead to a further economic instability of the euro areas. According to the president of European Central Bank, the departure of Britain will lower the growth of the Eurozone. So if another country in the EU are thinking of leaving the EU, it will lead to further economic instability and political as well. Although the Brexit is doing a favor to the US dollar, as it is making it a safe haven currency due to its stable economy, this will strengthen the currency of the US. I personally think that because of the Brexit, more speculators are going to buy US dollars instead of the euro, which means that there will be an increasing demand for the US dollars. The prediction is that the US dollars is expected to appreciate against the euro in the next couple of months because of the political and economic stability. On the other hand, even though the economic growth in the Eurozone is improving, there are a lot of factors that decreases the value of the currency. For example, the Brexit and the debt crisis. So I think that the US dollar will appreciate against the euro based on the analysis that I've done.